Money, Money, Money Insurance Special, co-presented by Exide Life Insurance.
Hello and welcome. You're watching Money, Money, Money. I'm Sumaira Abdi. The whole point of insurance is guarding against the risk of a certain eventuality. Health and medical issues are one such risk, and a big one at that, given the rising cost of medical care, and which is why Harshvardhan Rungta of Rungta Securities joins in this week and for the coming week as well to take us through the finer details regarding health insurance. Harshvardhan, always a pleasure to have you. So good of you to join in now on our insurance series. Since we're talking about health insurance this week and the next, first up, why don't you tell us, if someone were to go and buy health insurance right now, what are the 4 or 5 things that they absolutely must know?
Well, Sumaira, to begin with, there is nothing better in a policy than its own features. So while the sector has been opened up, you will find so many options available these days. What you need to do is first check the features of a particular policy. So you need to make sure that there are no sub-limits into the policy. Now, some segment of companies offer insurance policies which have certain restrictions. Now, in the sense of a room rent. Now, one segment of companies offer policies which have 1% of the sum insured as the room rent limit. The others would have no such limit. So, in case you're insured for a cover of 5 lakhs, for the policies which have a sub limit, you are entitled to stay in a room worth 5,000 rupees. And in case you stay in a room or you get admitted into a room which is more than 5,000 rupees, all your other expenses are proportionately reduced. Your OT charges, because they are again linked to the room category.
Is it not that just the claim for your room rent would be cut off at that amount?
No, not that way. It doesn't work like that. Now take this example, if you have to elaborate. You have a sum insured of 5 lakhs. You're entitled to stay in a room which is 1% of the sum insured. So up till 5,000 rupees worth of a room, if you get admitted, your claim is payable, otherwise if it's admissible. In case you stay in a room, for calculation purposes, if you get admitted in a room which is 10,000 rupees per night, what happens is all the other expenses which are proportionate to the room category, like OT charges, are basically linked to the category of room that you're admitted in.
Right.
So you will be paid the OT charges only equivalent to that much, which was linked to the 5,000 rupees worth of a room. So not only the room charges, but all the related charges will also proportionately get reduced. So this is a major restriction, considering that you have a cover of 5 lakhs, your claim is up to 1 lakh, but it is going to be reduced because you've stayed in a room which is above the sub-limit.
Alright, so any sub-limit, any sort of sub-limit whatsoever is something that you absolutely must avoid.
Most certainly, because you have another options available to you these days which do not have those restrictions. So sub-limits on room rents is one. Then there are certain treatments, the maximum cost of which has been restricted in case of cataract. Now all the public sector enterprises have a limit of 24,000 rupees in case of cataract surgeries per eye, which is not the case with some other options that are available. So you need to see these kind of restrictions within the policy. Then this other thing that you would need to see is the waiting period. Some companies have a waiting period going up to 4 years for a particular ailment, wherein you will see that the other company has a waiting period of only say 2 years. So what you could do, if there has been a history in your family of a particular ailment, you need to specifically look for the waiting period in that policy which you're going to take.
Okay. So amongst all of these, right, sub-limits, waiting period, as well as the maximum allowed deductible for an illness, what if one policy has, no sub-limits but a really high waiting period? I mean, which should you weigh as, more prominent?
See, it will be more dependent on your circumstances. In ideal circumstances, if there are no restrictions whatsoever, you should take a policy which has that kind of a feature, because if you are covered for 5 lakhs, you're paying a premium for 5 lakhs. So any claim up to 5 lakhs should be paid in a year, whether you stayed in a room which is 5,000 worth or a 10,000 worth, because you have taken a cover for 5 lakhs eventually. Against which, if there is a higher waiting period and you feel that there is nothing otherwise in your family as an history also, then you rather go in for a policy which has less restrictions and gives you the claim actually up till, covers you for the maximum amount. Because invariably you will see when you go to the hospital for admission, it's not what you ask for. It's more of what kind of category rooms are available. And you have no way to check whether if a room worth 5,000 is available, because if at the hospital they're telling you that no, there is no room, and you need to take the room which is available, which is 10,000, you have to get admitted. There is no choice.
Yeah, that's true actually. Okay, what about the other kinds of policies? I mean, there's family floater, there's individual. What kind of people are either or suited for?
Well, see, the option that you take is basically, these family floater and individual basically are options. Now, you need to cover yourself for medical expenses that you incur in a hospital. Now, if you take, if there is a family of 3, a husband, wife and a child, what you need to do is make a comparison. There is no right and wrong. You need to make a comparison. So, if an individual was to take a 5 lakh policy for the husband, for the wife and the child, if, for example, the premium comes to about 15,000 rupees, against which, if you take a family floater, then what happens is, the entire family is covered for 5 lakhs, and any one member can, or any member in the family can make a claim up to 5 lakhs. If you do a cost comparison, you will see in case A, where each individual takes 5 lakhs, and if the premium hypothetically is 15,000 rupees, or on the other hand, each family member, the entire family takes a family floater policy, you will see the cost differential is only 25%, about so. So, in one case where it was 15,000 rupees, the other would be, in a family floater, would be about 25% lesser. You need to make sure whether that 25% saving in premium, is that a motivation for you to restrict your entire family into one cover. If that is not the case, you rather take a policy which is 5 lakhs each, because then each individual is not dependent on any other one making a
claim. And I
claim.
guess also the features depend on the oldest family member in a family floater, right?
That's true.
So that's another disadvantage.
In case of a premium calculation, the premium is computed based on the eldest member in the family. So obviously you will have to pay higher for the younger one, but overall also, if you are comparing, the premium in a family floater is cheaper by about, say, 25%. In absolute terms, that would not be a huge difference. It would be about 3,000-4,000 rupees whatsoever.
Yeah, but definitely not worth the risk.
Yeah.
Okay, I know you mentioned 5 lakhs as just a hypothetical number, but what is a good number? I mean, how does one know? I mean, how do I know what's a good amount for me?
Well, there are 2 ways to go about it. The first factor is you take an estimation of the kind of treatment that you will take in the city that you're in. Now, in metros, obviously the cost of health is, cost of hospitalization or medical treatment is higher. So, we would say a 5 lakh is an amount that you should definitely consider. If you can go higher up to 10 lakhs or 15 lakhs, it's even better. But 5 lakhs is the minimum that you would want to take. Now, let's look at an argument that we normally come across, saying that tier 2 cities are, less expensive. I would say, if you look at the premium component, if you go in for a 3 lakh policy or you go for a 5 lakh policy, the differential amount in absolute terms is not large. So, it is always better to go in for a cover which is higher. Now, the other element would be the premium paying capacity. Now, medical insurance is not the only factor that you will include in your financial plan. There are many other things you need to. So, you need to also put some mind onto the premium that you are able to pay or allocate for this particular purpose. In any case, I would say 5 lakhs is a cover that every individual should at least take for themselves.
Alright, so that's the bare minimum. What is a defined benefit plan, and is it significantly better than a regular plan?
Well, within the health space, there are different kinds of policies. The first one that we have been talking about till now is an hospital expenses reimbursement policy. So what it means is basically it works on the principle of indemnity. Whatever is your expense that you've incurred, only that much will be paid. You have a cover of 5 lakhs, but if you've incurred an expense of 1 lakh, 1 lakh will be reimbursed to you, provided it falls under the claim. On the other hand, there are some kind of defined benefit policies, which you've just mentioned. These are basically critical illness, if I may have to say so. So, assume you've suffered with a heart attack. You get admitted into an hospital. Whatever your expenses are taken care by your Mediclaim policies. On the other hand, defined benefit policies would say, you've suffered with a heart attack. We give you a lump sum in your hand. Whether you're hospitalized, not hospitalized, they're not concerned about it. And one lump sum is given out to you. Why is that, and what's the purpose behind that? The idea is that because you've undergone a particular ailment, there is a reduction in your earning capacity, in your productivity. So there is going to be some loss of income due to that. Once you've diagnosed or once you've suffered with a heart attack, you surely cannot immediately get back to work in the same proportion the way you were doing it earlier. So there is going to be loss of income. So this defined benefit policy is primarily designed to compensate that loss of income. So in real sense, these are not comparable. Whereas one is a reimbursement policy where the actual expenses incurred have been reimbursed. The other is compensating you for a loss of income. So in an ideal situation, you should take a combination of both.
So this is like a rider that you can add on.
Absolutely. And even today, we have standalone defined benefit policies available. Earlier, they were forming a part of a life insurance cover in the form of a rider. But these days, we have standalone defined benefit policies.
All right, so that sounds fair, but we need to take a very quick break on that note. Harshvardhan is going to stay on with us, and when we return, he's actually going to be answering some of the queries that have been sent in by our viewers. Do stay tuned to Money, Money, Money.
Money, Money, Money Insurance Special, co-presented by Exide Life Insurance.